Hey guys, looking at GME today, and we're going to go through some Reddit DD, which we'll talk about where the price will be in the next couple of days. Some pretty solid information, if I do say so. So we'll be going through that. But just before we get into that, we'll be talking about what GameStop has done today. So it's currently at $185. The market is still open, but about to close soon. And you can see it started the day at about 187, shot up to highs of 195. Just 2 hours after open, and then has been going down a little bit and settled at about 185. So after yesterday's 10% gains, a little bit sad to see it go down 3%, but we all know this is not a sprint, it is a marathon. So just before I get into some technical analysis, please give a like on the video, guys. You've really given me a lot of support, and that's why I keep on doing these videos, to keep helping you guys out. So if we just go to GameStop and do it on the year, this was a original trend line that I loved, which unfortunately it has broke below that. But there is a new one here that we have identified as kind of a new low that has been respected since basically March, sorry. And even if we go there a little bit longer, you can see that after the initial squeeze, and then the price went down and then it's gone up. You can see this is actually trending up still in the right direction. So this low, which has been going on since early February, has not been breached. So that is still a positive bullish movement that we're seeing here, with the highs at 350 and then slowly creeping up. So that's very, very good to see. It seems that we haven't gone to the lows, even though we had this high, not this high, sorry, this 350 back in June. Overall, GameStop price is still going up and up. And why is that? Well, if we go on to the first Reddit post, this is a tweet, and it's breaking news. Melvin Capital is estimated to extend losses to 53% of the year, which is near $3.2 billion in January. According to Bloomberg, it was estimated to be down 49% in April. So that is a massive amount of money that one of these shorting hedge funds has lost. And why have they lost so much money? Well, because they shorted GME and they've tried to kick down the can down the road. They've kept on paying interest on all of these margin calls. The failure delivers, they're piling up. And instead of covering the positions, which they cannot because the price is too high and they've shorted too much, they're just going to keep kicking the can down the road. So this company, they haven't lost everything. They're not going to go bankrupt, but they are towards that. And when the first domino falls, then I think everything's going to fall. I don't know if that's the correct reference. I don't know if dominoes fall, but if it does fall, you'll see it falling. So this is quite big losses. But now let's have a look at some of the DD here. So let me just quickly go to the DD I was talking about before. And this is by a user called I Had That 20 Years Ago. And this is the counter argument to end of the T plus 21 cycles, thoughts and comments. So here we have a chart of the times, and this is February, March, April, May, June, and this is showing where after the T21 cycles where the price is, and this is the lowest daily price on the T21. So you can see in February it was, I can't really make out this price, but I think it was around about $36, 116, 148, 181, around about 223, because we hit that. And then if we go look in the future, this was the previous one, and you can see that they have the T21 again, and it's going up and up and up and up and up. So these are the current lows on the 29 cycle days, and 24/6 was right on target. So that would estimate that in 5 days that the price will be $243 a share. So this has been following and working since February, and this Reddit user is speculating that it will still continue and go up and up and up. So why is this important? Well, I suppose if you're looking at the days, it's a steadily growing floor. It keeps on going up and up, and it seems that this has been doing it since after the initial squeeze. So it's not about the highs we care about here, and that's what I'm saying in the previous thing. It's not about the highs. The highs are great, but it's the floor. Where's the floor going? And it's going up and up and up and up and up. So where this user, and I think I'm along the same lines as them, is they're expecting the daily low on the 7th of the 26th of this month to be around about $240 a share. Now, does have quite a bit to go to reach that, but I still think it is possible. And yeah, this is some very good information. So that's by the user. I had that 20 years ago. And if we just go to, there's you can see the graphs, the charts in more detail. So still a bit to go. It's normally trading above and then drops below, and it's gone above and drops below, but now we're expecting another bullish movement like what we saw in February to the previous highs. But where's the low? That's the key point. And here's something else, which is a very similar post by a Reddit user, Low or Good. And this is the T35s, and this is very similar. It's the closing price. So you can see here we have the closing price on each of the T35 dates, July, August, September, etc., etc., etc. And what is this showing? Well, because the FTDs are reset, the shares are hard to borrow. You need to manufacture some. And how do you do that? You do them through puts, you do them through short ETFs, and you're shelling shares that you don't have. So why T35? Well, the T35 is the period of deliver of FTD resulting from the short sale, and this is Rule 204 from this document from the SEC. The firm has up to 35 calendar days as the following trade date to close out a fair deliver position by purchasing securities of any kind and quantity. So how do they do that? Well, as I said before, they do it through options, they do it through shorting other ETFs, they do it through many different ways. Options seems to be their weapon of choice at the minute. So if you they've mapped it down below, and if the price goes down during a can kick and the apes are buying shares, that leads to the price going up. What we should see is every 35 days low should be going up and up and up, and they've used Yahoo Finance to calculate the dates, and here is the chart here. So what you can see is the real price from GME and the stonks are going up. So you can see the price is increasing, and well, let me make this bigger. No, it's not that much bigger. But you can see here the price is increasing, and the floor is always going up. And that is the point. That's the lowest price in those days. The highs are nice. The $350 a share is nice to see. All of that stuff's great. But the point is, the whole point of this is getting the floor of GME up, and it's going to keep going up and up and up and up until eventually everything explodes. They can't cover it. They can't do their options. It's going to cost them too much money. Companies like Melbourne Capital go bankrupt. Then it all eventually goes to the FCC. Then goes to the clearinghouse. And then the computer buys the shares, and that's when the Moass happens, because apes don't sell, apes never sell, and well, when the apes sell, sorry, they sell on the way down. We don't sell on the way up, we sell on the way down. So this is going to keep on going. So for some very interesting stuff over the next couple of days. Can we get $240 a share by the following Monday? And what is this going to go in the T35? So it won't be like that till July. This is only expecting it to be, sorry, it'll be August. We need to be in August ahead of $160. They're probably estimating around about 180. Now, we want the gains, we want all that stuff, but the key is keep the floor going up and up and up. Right, guys, just want to say thanks for watching. Give a like on the video if you enjoyed it. Subscribe if you're not already subscribed, and I'll catch you guys next time.